Donald Trump's latest outburst has shocked political observers as Luxembourg, a tiny European nation, pulled a staggering $180 billion from American markets. The US president went on a social media rampage, calling Luxembourg's move an act of financial warfare and threatening massive retaliation. This sudden withdrawal of funds has sent shock through Wall Street, with some experts warning it could trigger a chain reaction among other European allies. As tensions rise between the United States and one of Europe's smallest but wealthiest nations, millions are wondering what pushed Luxembourg to take such a dramatic step and how Trump's policies might have set this conflict in motion. The answer came swiftly, and it started with tariffs. Trump's imposition of tariffs on the EU and Luxembourg. President Trump shocked the world when he announced massive new taxes on goods coming from Europe. These weren't small taxes either. We're talking about a huge 20% tax on almost everything the European Union ships to America. That's 1/5 of the price added on top. Trump didn't hide why he was doing this. According to him, they're taking advantage of us, he declared. It was strange and confusing that this small country with fewer people than Memphis, Tennessee somehow became Trump's main target. The White House released statements claiming Luxembourg had been using unfair trade practices and stealing American jobs for years. The tariffs hit all kinds of everyday items: cars from Germany, cheese from France, and especially financial services from Luxembourg. Banking and investment companies in Luxembourg suddenly found themselves facing huge new costs to do business with America. Luxembourg's prime minister was quick to respond. "These accusations are baseless," she said during an emergency press conference. "Our country has always been a fair trading partner with the United States." She pointed out that Luxembourg actually invests billions of dollars in America, creating thousands of jobs. European Union leaders gathered for an emergency meeting in Brussels. They called Trump's tariffs dangerous and illegal under international trade rules. The EU Trade Commissioner warned, "This is not how allies treat each other. There will be consequences." Back in Washington, some of Trump's own advisors seemed uncomfortable with the decision. When reporters asked about targeting Luxembourg specifically, one White House official looked down at his shoes and mumbled something about strategic economic priorities. American businesses that rely on European goods started panicking. Car dealerships worried about price increases on European vehicles. Grocery stores calculated how much more expensive wine, cheese, and chocolate would become. Investment firms with connections to Luxembourg scrambled to figure out what this meant for their operations. Trump doubled down on Twitter. "Luxembourg has been robbing us for decades. No more. America first." His supporters cheered the tough stance, while critics pointed out that Luxembourg represents only a tiny fraction of America's trade. What nobody realized yet was that Luxembourg wasn't going to take this lying down. Behind the scenes, Luxembourg's financial leaders were already planning their response, one that would send shockwaves through Wall Street and potentially cost the US economy billions. The question on everyone's mind: how could such a small country possibly fight back against the world's largest economy, and what would happen when they did? Luxembourg's withdrawal of $180 billion from US markets. In response, Luxembourg recently pulled a whopping $180 billion from US markets. This wasn't just pocket change. We're talking about money that could buy every video game console for every kid in America and still have enough left to build a dozen theme parks. The tiny European country, smaller than Rhode Island, shocked financial experts when it started moving its investments away from American companies and government bonds. Luxembourg's money was spread across many parts of the US economy. About $75 billion in technology stocks like Apple and Microsoft, $50 billion in US Treasury bonds, and another $55 billion split between real estate investments in various American companies. Why would Luxembourg make such a big move? The timing tells us a lot. This happened right after new tariffs were announced on European goods. Tariffs are basically extra taxes on products coming into America, making them more expensive for people to buy. When the US put these tariffs on Luxembourg's products, the country's leaders weren't happy. Luxembourg's prime minister made it clear this wasn't a random decision. "We invest where we feel respected as trading partners," he stated during a press conference in the capital city. Luxembourg's financial minister added that they were simply protecting their national interests by moving investments to places with more stable and predictable trade relationships. The effects were felt immediately. Several major tech companies saw their stock prices drop. Real estate projects in New York, Miami, and San Francisco that had Luxembourg backing suddenly found themselves scrambling for new investors. US Treasury officials held emergency meetings to discuss how to handle the sudden shift. What makes this especially interesting is that Luxembourg isn't just any small country. Despite its tiny size, it's one of the world's major financial centers. Many international companies and investors keep their money there because of its banking system and tax benefits. When Luxembourg makes a financial move, other investors often follow their lead. Some financial experts are worried this could start a trend. If other European countries follow Luxembourg's example, we could see over $1 trillion leaving US markets, warned one Wall Street analyst. This kind of money movement could affect everything from mortgage rates to the cost of college loans. The Luxembourg government has redirected most of these funds to investments in Asian markets, particularly Singapore and South Korea, with some also going to neighboring European countries. They've made it clear that this isn't a temporary move. These investments are being set up with long-term plans in mind. As news of this massive withdrawal spread, many Americans were left wondering, is this just about tariffs, or is something bigger happening in the relationship between the United States and one of Europe's smallest but wealthiest nations? And if Luxembourg is taking such dramatic steps, what might other countries do next? Diplomatic strain, potential closure of the US Embassy in Luxembourg. The small European country of Luxembourg has shocked many by considering the closure of the US Embassy on their soil. This news comes right after they pulled a massive $180 billion from American markets, showing just how serious the situation has become. The US Embassy in Luxembourg, a beautiful building located in the heart of Luxembourg City, has been a symbol of friendship between the two countries for decades. Now that friendship is being tested like never before. Luxembourg's Prime Minister Xavier Bettel didn't hold back when speaking to reporters. "We value our relationship with the American people, but the current administration's policies have forced us to reconsider our diplomatic ties," he said, his face showing clear disappointment. If the embassy closes, it would mean American citizens living in or visiting Luxembourg would have to travel to neighboring countries like Belgium or Germany for passport services, visa help, or emergency assistance. For the roughly 2,000 Americans living in Luxembourg, this would create real problems. The US ambassador to Luxembourg, Randy Evans, called the situation deeply concerning and mentioned that his team is working around the clock to repair the relationship. "We've been allies for generations," Evans said. "One disagreement shouldn't erase that history." Some experts believe this move is mostly symbolic, a way for Luxembourg to send a strong message without causing too much damage. Others see it as the first step in a bigger plan to pressure the US into changing its policies. What makes this situation even more interesting is that Luxembourg, despite being smaller than Rhode Island, holds significant financial power. As one of the world's leading financial centers, their actions can influence other countries, especially in Europe. The State Department in Washington has released a brief statement saying they remain committed to maintaining positive relations with Luxembourg, but didn't directly address the embassy closure threat. Meanwhile, regular citizens from both countries have expressed confusion and worry about the growing tension. Sarah Miller, an American teacher working in Luxembourg for the past 5 years, shared her thoughts. "It feels like we're caught in the middle of a fight between our governments. Most Luxembourgers I know don't have any problems with Americans. This is all happening at the political level." Luxembourg officials have given the US government 1 month to respond to their concerns before making a final decision about the embassy. They've created a list of specific issues they want addressed, though the full details haven't been made public. As both sides try to navigate this diplomatic minefield, many wonder if this conflict will spread to other European nations. France and Germany are watching closely, and some reports suggest they might follow Luxembourg's lead if their own concerns aren't addressed. The question now hanging in the air: will this diplomatic standoff remain contained between the US and Luxembourg, or are we witnessing the first domino in a larger collapse of transatlantic relations? European Union and Luxembourg's unified response to Trump's policies. The European Union didn't waste time coming together after President Trump threatened new tariffs. Like students joining forces against a playground bully, the 27 EU countries quickly formed a united front. Luxembourg, though small in size, played a big role in this response. The country's finance minister, Euriko Bax, called an emergency meeting with other EU finance leaders in Brussels. "We cannot stand by while unfair tariffs hurt our businesses and citizens," she said. "Luxembourg may be small, but our financial voice is powerful." The EU Commission president added, "These tariffs would hurt both Americans and Europeans. We need to respond with one voice, not as separate countries." What made Luxembourg's stance so important was its massive financial power. Despite having fewer people than many mid-sized American cities, Luxembourg manages about $5.5 trillion in investments, a huge amount of money that gives the country serious influence. Foreign officials from France, Germany, and other EU nations backed Luxembourg's approach. Germany's finance minister stated, "When one EU member is targeted, we all respond together. Our combined economic strength is our best defense." The EU quickly developed a three-part plan. First, they would try talking with American officials to prevent the tariffs. Second, if talks failed, they would file complaints with the World Trade Organization. Third, they would create their own counter-tariffs on American goods. Luxembourg's Prime Minister Xavier Bettel explained the situation simply. "We've always been friends with America, but friends don't treat each other this way. We need to protect our workers and businesses." The EU Trade Commissioner warned that Europe was prepared to target American products from states that supported Trump politically, a strategy they had used successfully during previous trade disputes. What made this response different from past trade arguments was the financial element. Luxembourg's threat to move $180 billion out of US markets wasn't just talk. It represented real money that could affect American banks, businesses, and even regular people's retirement accounts. European leaders emphasized they didn't want a trade war, but wouldn't back down from one either. "We prefer cooperation over conflict," said one Belgian official, "but we will protect European interests if pushed." For middle school students in Luxembourg and across Europe, this situation meant their countries were standing up for themselves on the world stage. It showed how even smaller nations could have big influence when they worked together with allies. As the EU prepared its response, Luxembourg's officials continued meeting with European partners, making sure their voice was heard in the larger conversation about how to handle America's new approach to trade. Economic ramifications for Luxembourg and the United States. The economic effects of this growing trade dispute are already being felt on both sides of the Atlantic. When Luxembourg began pulling some of its $180 billion from US markets, it sent ripples through Wall Street that nobody could ignore. For Luxembourg, this bold move carries both risks and opportunities. The tiny European nation, with fewer people than Memphis, Tennessee, has built its economy around being a financial powerhouse. Nearly 30% of Luxembourg's economy comes from financial services. That's almost 1 in every 3 jobs connected to banking, investment, or insurance. Moving billions of dollars isn't like moving money from one pocket to another, explains economist Marie Dumont. It's more like trying to turn a massive ship. It takes time and careful planning. Luxembourg's banks have started shifting investments to other markets, particularly in Asia and within Europe itself. The Luxembourg Stock Exchange, which lists over 35,000 securities, has been working overtime to help companies adjust their portfolios away from US assets. Meanwhile, in the United States, the withdrawal of Luxembourg's investments has created some immediate problems. Several major construction projects that relied on Luxembourg funding have been put on hold. In Chicago, a new office tower development lost $340 million in financing. In Texas, 3 renewable energy projects can't move forward without their European investors. The trade deficit between the two countries has also shifted dramatically. Before this dispute, the US actually sold more goods to Luxembourg than it bought, about $1.2 billion more each year. Now, with new tariffs in place, American companies are finding it harder to sell their products in Luxembourg. For example, Kentucky bourbon, which was popular in Luxembourg's bars and restaurants, now costs 25% more because of retaliatory tariffs. Sales have dropped by almost half. Similarly, American tech companies like Microsoft and Amazon, which operated data centers in Luxembourg, are facing new regulations that make doing business more expensive. Small businesses are feeling the pinch too. Jessica Martinez, who owns a company in Ohio that makes specialized medical equipment, lost her biggest Luxembourg client last month. "They told me they wanted to keep buying from us, but the new tariffs made our products too expensive compared to similar ones from South Korea," she said. Luxembourg businesses are also struggling with uncertainty. Many companies there have built supply chains that depend on American parts or materials. Now they're scrambling to find alternatives. Luxair, Luxembourg's airline, has delayed purchasing new American-made aircraft while they wait to see if the situation improves. Banks in Luxembourg are creating special teams to help their business clients navigate these choppy waters. The Chamber of Commerce has opened a help desk specifically for companies affected by the changing US regulations. Perhaps most concerning for both sides is the impact on everyday people. In the US, some retirement funds that invested in Luxembourg financial products have seen their values drop. In Luxembourg, workers in export industries worry about their jobs if the trade dispute continues. But the effects didn't stop there. Global markets were next to feel the shock. Market reactions and future projections amid trade tensions. As news of Luxembourg's massive $180 billion withdrawal spread across trading floors, markets around the world started to react. The New York Stock Exchange saw its screens turn red as traders scrambled to adjust their positions. The Dow Jones dropped over 500 points in just the first hour of trading, while the S&P 500 and NASDAQ followed with similar declines. This is what happens when international relationships get personal, explained financial analyst Maria Chen. When a small but wealthy country like Luxembourg pulls this much money out of US markets, it creates ripples that affect everyone. On Wall Street, investment firms weren't just worried about the immediate drop, they were busy creating new strategies for what might come next. Goldman Sachs advised its clients to move money into safer investments like gold and certain foreign currencies. Meanwhile, smaller investment companies told their customers to wait before making any big decisions. The bond market took an especially hard hit. US Treasury bonds, usually considered super safe investments, saw their yields jump as prices fell. This happened because investors worried that other countries might follow Luxembourg's lead and sell their US bonds too. In Europe, markets had mixed reactions. The Luxembourg Stock Exchange actually saw gains as local companies prepared to receive some of the returning funds. German and French markets dipped slightly, showing concern about how this fight might affect the entire European Union's economy. Social media was buzzing with regular people wondering what this meant for their retirement accounts and college savings. One viral post read, "My 401k just dropped 3% because some country smaller than Rhode Island is mad at a tweet." Is this real life? What big tech companies like Apple and Microsoft saw their stock prices fall more than most. These companies do lots of business internationally, so investors worry they could be targets if the trade fight gets worse. Financial experts pointed out that $180 billion, while a huge amount of money, represents less than 1% of the total US stock market value. However, the psychological impact was much bigger than the number suggested. It's like when someone pulls their money out of a bank, said economist James Wilson. The actual amount might not break the bank, but if it makes everyone else nervous enough to do the same thing, then you've got real trouble. Some investment advisors saw an opportunity in the chaos. They recommended buying certain stocks at their new lower prices, betting that the situation would eventually calm down. As trading continued throughout the day, markets began to stabilize somewhat, but remained well below their previous levels. Currency traders reported unusual activity as the value of the US dollar fluctuated against major currencies like the euro and Japanese yen. The big question on everyone's mind, is this just the beginning of a larger financial storm, or will cooler heads prevail before more countries decide to follow Luxembourg's dramatic example? Potential resolutions and the path forward for US-Luxembourg relations. After weeks of heated words and money problems between the United States and Luxembourg, both countries are now looking for ways to fix their relationship. The situation got really tense when Luxembourg pulled $180 billion from US markets, which shocked many people who follow world money matters. Right now, representatives from both countries are meeting behind closed doors in Brussels. They're trying to find solutions that would work for everyone. The US team, led by the Secretary of State, has suggested a step-by-step plan to rebuild trust. This includes removing some of the trade penalties that started the whole problem. Luxembourg's prime minister has said they're willing to talk, but they want clear promises that the US won't threaten their banking system again. We need to know our financial choices won't lead to angry tweets or sudden taxes on our businesses, the prime minister explained during a press conference last week. The European Union is standing firmly with Luxembourg. They've warned that if the US doesn't back down, all EU countries might take similar actions with their investments. This could mean hundreds of billions more dollars leaving American markets, which would hurt the US economy even more. Some possible solutions being discussed include a special trade agreement between the US and Luxembourg that would give both countries benefits when doing business together, a promise from the US to respect Luxembourg's banking privacy laws, which was one of the main things that that started the fight. A joint committee with people from both countries who would meet regularly to solve problems before they get too big. Financial experts think the most likely outcome is a compromise where Luxembourg slowly puts some money back into US markets while the US removes its threats against Luxembourg's banks. Neither country really wants this fight, explained Dr. Emma Richards, who studies international money issues. The US needs foreign investment, and Luxembourg doesn't want to lose access to American customers. Meanwhile, regular people in both countries are feeling the effects. In Luxembourg, some investment companies have had to tell their clients that their American investments might be worth less now. In the US, some retirement funds that relied on Luxembourg's investments have seen their values drop. Both leaders face pressure from their citizens to fix this mess quickly. The US president's approval rating has dropped since the conflict began, and Luxembourg's government is worried about upcoming elections if the economy suffers. The good news is that history shows most trade fights like this eventually get solved. In 2018, similar tensions between the US and Canada were fixed after a few months of talks. As negotiations continue this week, the world is watching closely. Whatever agreement they reach could set an example for how other small countries interact with larger ones in the future.